The real cheap stocks are gold stock. Gold's going to be tilted to 1800 this year. I've always advocated the 10% golden rule, and that is 5% high quality gold stocks and 5% bullion.
Please join us for our next live stream, Sunday, February 16th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, February 16th, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Housekeeping aside, if you are new to this channel or you have not already done so, please do subscribe. Click on the bell to be notified on new updates, and do give us a thumbs up if you like what we do. We really do appreciate your support. Today we have with us a returning guest on SBTV, Frank Holmes, the CEO and Chief Investment Officer of U.S. Global Investors, a boutique investment advisor specializing in emerging markets and natural resources. And we are delighted to have him here today as a return guest. Good day, Frank, and welcome back to SBTV. How are you doing?
Outstanding, my friend.
Outstanding. Outstanding is always good. Frank, I know back in 2018 you called for $1,500 an ounce gold, and fast forward today, you got it. Not only did it hit 1,500, but it touched on 1,600 a few weeks back, and it looks like we're flirting with it again, so that's a pretty good call, my friend. Can you share with us the reasons why you were confident with that $1,500 gold call?
Well, there's two things. What's important for all investors to realize that every asset class has its own fingerprint or DNA of volatility. So it is a non-event for gold to go up or down 20% of the time over any rolling 12-month period. So I could easily with comfort say gold can go to 1800 this year, or it can fall back to 1200. That would just be its normal DNA of volatility. What skews it on the upside is the fact that we had a trade war, and we also had, and the trade war is significant because China and America are 40% of global trade. China and India are 40% of the world's GDP per capita consumption, 40% of the world's population. So it's important to look at those two factors. I got a triangle. I have China, I have America, and I have India. And so it's understanding the movement between those macro themes. Then on top of that, you had Europe. Europe's very socialistic. All their policies are beautiful in the storytelling, but the heart of them is to strip away your property rights of some form or fashion and elevate them to a very small group of political people dictating what people should do, go where, and when. And what they have done is they've created a big imbalance between monetary and fiscal policies. And what we're witnessing is the use of monetary policy to drive economic prosperity rather than dropping, say, taxation, which is a fiscal policy, which would include regulations and taxation. The EU are still on steroids on taxation and regulation. When we look at the collusion between all those countries and the G20 nations, prior to 2008, it was global trade, and today it's synchronized tax and regulation. That's the real significant part. So they do not want to give up on regulations. They do not want to streamline regulations, even though you have Brexit. And Brexit has to do with being strangulated with all these regulations of the EU. So they're driving, and in the summer we saw them go to negative real interest rates that even countries like Denmark were offering to pay you to take out a mortgage. And you have negative real interest rates. And that when you look at the sheer number of governments offering negative rates to stimulate economic activity, what do we see? Gold propelled to $1,600. You just see it just surge. And then it came off a bit, and now it looks like that model is climbing again. The other thing I write about every month is what's called global PMI, Purchasing Manufacturers Index. And it's a great forward-looking 6-month tool. And the global PMIs were sinking until August, when all of a sudden the EU started all this money printing. And then the US realized they were trying to pull away the punch bowl, but they were causing huge problems of lack of liquidity in the global economics. So what did they do? They started doing these massive repos, like $1 billion every hour. And what did that do? That just spurs gold as an asset class. So I think this year is going to be marked by, without a real policy to streamline regulation and taxation, is really an inherent policy to push monetary money printing to drive economic prosperity. What's also very interesting is that countries like Switzerland, who used to buy gold, what they're doing, they're printing all this funny money and they buy their own stocks. They buy Apple. They're one of the biggest shareholders in Apple. You're seeing the same thing in Japan, that they float all this money. No one's going to take the negative real interest rates, so they buy it back themselves. They create this funny money, and they're now the biggest shareholders through the ETF of Japanese stocks. So now you've got global stock markets rising, and companies can't issue stock that way without crashing. But the synchronization of OPEC, like between the G20 countries, means they can still keep getting away with this. And as long as they keep getting away with this, I think gold's going to be tilted to 1,800 this year.
So talking about the ECB, how about the Fed? I mean, do you think the Fed will continue its not QE monetization of the debt? I mean, injecting liquidity into the markets. Do you think that's going to continue?
Well, I think they're going to, because they realize that the dominant currency of the world is the U.S. dollar.
Right.
And when they were buying back all those government securities to reverse the QE2 and 3, all of a sudden it created a suffocation around the world of flow of funds. So I think they're going to maintain that because they're worried. You know, the PMI, global PMIs turned positive, but the U.S. sank. I mean, it's the ISM number, they call it, is below the 50-day number. And I've written about it. This is the biggest thing that can derail President Trump from being reelected. Because in 6 months from now, if that ISM number stays below 50, that means we're going to start seeing a surge in unemployment numbers. We're going to see defaults in credit cards, car loans, etc. So they have to, now with this trade war behind us, they have to do something to stimulate the economic growth of manufacturing in America.
You know, recently the Fed, they paused at the last FOMC meeting, no change. But going forward this year, with all that you've just said, do you see that interest rate having a chance to go up, staying where it's at, or having to reverse and come back down?
What's more important are real interest rates. So that is, what is the government trying to seduce you with? Hey, big guy, buy my government debt. Well, if it's a positive yield, okay, it's a deal. But if it's negative, no. So it's so important to take a look at what do they want to seduce you with 5-year yield minus the CPI number. If it's negative, no. If it's positive, yes. So what does that mean for your historical basis? Gold hit 1,900 in August, September of 2011 because the 10-year government bond in America had a minus 300 basis points yield. How did it have that? It's because inflation took off. The 10-year government bond fell down to under 100 basis points, but inflation all of a sudden surged to 4. That basically propelled gold to 1,900. Then gold fell for the next 5 years to $1,000, and that's because real interest rates in America went up to plus 100 basis points. So that swing is what's so critical. When we look at other countries like Europe or Japan, etc., it's important to look at these negative real interest rates rather than just rates rising or falling. Turkey has high interest rates, but they're negative. So what does that mean? It means that the currency is always being devalued. Anytime it's gone positive, then the currency goes through a big rally.
I want to go back to the repo market. What do you think is really going on? Because Jerome Powell first came out and said, you know, this is for taxes. They have to pay corporate taxes. And then extended. More liquidity. I mean, what do you think is truly going on in that market?
Listen, they were the big QE 1s and 2s and 3s. Now they said they're going to pull the punch bowl away. They're going to unwind that trade. All those bonds floating out in the cyber world, they're going to bring them back in. And when they started bringing them back in and buying them and getting rid of them, there's less U.S. dollars around. There's less U.S. dollars around. How do you do trade? counterparty, borrowing against that collateral. So you had a shortage of dollars, and that only made the dollar stronger. That was also creating difficulty for global trade in other countries because the dollar is the dominant form of collateral for trade. And so then they realized they have to print money. If you go back to 2018 in the fourth quarter, the stock market was getting pulverized, just beaten up because they were pulling away money out of the system. They took too much too quickly. They were slow to read the tea leaves, and all of a sudden the panic button's on, and they have to print the money by creating repos. If they don't, you have a global depression. If you have the coronavirus and you have a trade war, and there's a shortage of liquidity with dollars, that is a signal of a major crisis. So the Federal Reserve is showing leadership. It's a little late, but they have to be there, and this is bullish for gold.
Do you think the price of gold reflects the sentiment of the economy? The higher gold goes is perhaps an indication of uncertainty or perhaps even confidence in the economy, and maybe that's why we're looking at that $1,800 gold?
Well, it's a combination of both. It's important to recognize as the fear trade, which captures 80% of all the imagination of media. But really, underneath that, 60% of all demand is love. It's a love trade.
Yeah.
And so what's really key with the love trade is GDP per capita. So let's look back 30 years ago. China and India had a very small GDP per capita. Today, they are number one and number three. So what does that mean? In 30 years ago, China and India consumed 10% of all the world's gold. Today, they're 52%. That's because their GDP per capita has risen faster than every other nation around the world.
Physical gold and stocks, being a veteran in the resource sectors, how do you decide how much physical gold to hold versus how much gold stocks?
Well, I just think it's when we're talking about this love trade, is there'll be the biggest thing that could derail the love trade in any one year has been Chinese demand. Maybe this coronavirus is going to have an impact. But what all your listeners and viewers should be seeing is that gold and silver, viruses can't attach to them. That's the nice thing about them. That's why the concept of silverware for cutting your food, etc., because viruses don't attach to them. And so they'll become more important than paper money or digital money. But with digital money, you need electricity or battery. So I think that it's for investors, etc., giving out silver coins. That's the perfect year of the rat. And who's got the rat silver coin? That's the one that will be given out this year. And I think you're still going to see that demand in India. The big factor is not so much what the year of the animal is, but it's more of how the farming is doing, the farmers are doing, and the greater their wealth is, the greater they consume for wedding season, more gold to give.
But again, I got to ask you, how do you determine how much physical bullion to hold versus how much gold stocks?
You know, that's a great question. Ray Dalio, the largest hedge fund manager in the world of Bridgewater, I believe says between 6 and 15% should have gold exposure. And I think most of his is predominantly gold, and he has royalty companies, etc., in that mix. So I've always advocated the 10% golden rule, and that is 5% high quality gold stocks, and make sure their numbers are on side every quarter, and 5% bullion. And if you're feeling more adventuresome, then add 5% to 24 karat gold jewelry. So now you have that sort of 15, and you get to wear your money.
You touched on the Wuhan coronavirus. You think that's going to affect perhaps gold price to the downside?
Well, it's hard to say. You know, one of the things that I would say the concern I have is or this virus is not to be compared to SARS.
Right.
I think it's much more compared to 9/11. You know, I was in New York downtown in 9/11, and I had to drive back the next day, rent a car, and drive all the way back to San Antonio. But I remember so vividly that everything shut down. All the airports shut down. I drove back before the airports were even opened. Cell phones, nothing worked for the first 12 hours in New York. Everything was trying to phone and jammed. So now we're seeing all these airports being shut down. We're seeing cities going through a lockdown. This is to me much more reminiscent of what took place in 9/11 than it did with SARS.
You wrote a recent article. Buy and hold has historically been a winning investment strategy, and you called out the naysayers and perma bears who have repeatedly predicted an end to the 10-year U.S. economic expansion. And in your view, not only have they been wrong time and time again, but they may have been also discouraging investors from participating in a pretty historic bull market. Can you share with us the context of what you wrote here? Is the economic situation looking rosy, and how solid are the foundations of the bull market you wrote about?
All big crashes, all big crashes happen to do in a history of over leveraged society if it becomes too leveraged. So what we saw in 2008 was a crisis of people buying houses all over America with 5% down. Brokerage firms were 33 to 1 leverage. That means a 3% swing in their portfolio, they're wiped out. That's all changed. And historically, whenever you have a credit crisis like you had in 2008, it takes about 4 years to repair itself. If we go back in history, it's a remarkable. When we had the Asian crisis in 97,
Mhm.
that all bottomed in 2001, 4 years later. 98 was when Russia defaulted on their sovereign debt. 4 years later, all of a sudden, Russia's taking off. So I think that we're in a secular bull market. I think that all this money printing using monetary policies and buying the stock market is levitating. We're also seeing in America policies of so much regulation is basically buying back stock, is also shrinking the number of shares outstanding. So there's a premise for stocks, but the real cheap stocks are gold stocks. And gold stocks have been a real destroyer of value. They've done so many dumb mergers, financings. They never found the gold. So there's a real distaste or not trusting. And I've always recommended the gold royalty companies like the Franco Nevadas, the Wheaton Precious, the Royal Gold, because they just have better returns on capital. And that's why I launched that GOAU ETF listed on New York Stock Exchange, because it's a quant approach to screen out those stocks and 30% of those royalty companies. And we outperform the GDXJ going back 92% of the time in rolling 12-month periods. Since we launched, it's done that. And when I look at gold stocks divided by gold, they're historically cheap. When I look at gold stocks relative to the overall stock market, they're also historically cheap, inexpensive. And bullion relative to the stock market is very, very inexpensive. So I think gold and silver and gold stocks going forward are going to all of a sudden capture the imagination and get better returns on capital. New management, new CEOs in many of these mining companies, they're more disciplined. So I think the big trade is going to not just be owning gold and silver, it's also going to be owning high quality gold stocks.
A lot of analysts they're saying there's bubbles here, bubbles there, bubbles everywhere. Um,
Everyone's got a PhD in bubbleology.
yeah. So I mean, how does an investor, what should he be looking for when he's looking at these gold mining stocks, gold mining companies? If there's bubbles everywhere, how can he feel a little bit more comfortable going into this sector?
Well, I'm so biased, so please, you're asking the wrong guy, because it's Go AU, it's Go Gold, because it's so disciplined and rigorously back tested that any company that destroys their revenue per share or their cash flow per share or their returns on invested capital over any quarter over compared to the past year, they're gone. We get rid of them. And we basically high grade only those 25 names which have the greatest discipline. So, out of a universe of 100 gold stocks, we are focused on three major royalty companies and thereafter 25 gold stocks which have better financial metrics.
Are gold mining stocks out of the woods of the bear market, and what potential do you see in them from here?
I think what's going to happen is the math suggests that whenever they go for 12 quarters where they show great metrics on a per share basis, all of a sudden the generalists, the non-gold fund manager starts buying them. And I think we're coming up this year that for the past 1 year and 3 years, gold stocks are showing growth in revenue per share, growth in cash flow per share, and higher returns on invested capital than the S&P 500. So immediately on the quant world, they become more attractive and people start buying them.
I know you have some interest with gold spot discoveries. Can you tell us a bit about that? Because it looks pretty interesting where you folks are using AI to I guess, go after the deposits, the exploration.
Well, the whole concept of quant approach is what I've done for stocks, and that's where GOAU and my Jets Airlines ETF is very quants driven in how it picks every quarter the best performing stocks, and not in price action, but internal mechanisms that over time always give you better valuations. So that concept of understanding it really appealed to me for AI because these explorers have spent billions of dollars and found nothing. The number of discoveries of 3 million ounces of gold have fallen greatly. They've all been picked off. Mother Nature is becoming more challenging. There's no technological breakthrough like fracking was to change the energy price world. So what do you do? And so this concept of AI, machine learning, really appealed to me. So I put a couple $1 million in one as a chairman, and they have 9 PhDs in Montreal. They're young people in their 30s, and they understand Montreal's become the sort of a major center in North America for AI and machine learning because of the university program started 15 years ago. That McGill and other schools now. So I think that this concept is really rendering it. And now they've made a discovery, came out with a press release yesterday. One of their big investments, Newfound Gold. Immediately, Eric Sprott and Rob McCune put money into it. It's a private company going to go public. They have a mega discovery. Grand Columbia, one of our holdings, they've used it, and it's confirmed that for discoveries zones that they're looking for. Yamana's made press releases that they've had a couple of new discoveries, and they attribute their success is using the statistical model. So what does it really do is it de-risks exploration. And if there's less money to explore, whereas before it was easy to raise $10 million, now you can only raise two. Well, spending money in AI gives you a better shot of discovery.
Just kind of, I guess, walk us through the process. Like, let's say somebody has some land, a claim of sorts, and I know typically old school will go and will drill, look for samples and plot it out. But this machine learning AI, how's the process work with that?
Well, here's a classic. You use your iPhone, identifies your face, automatically your phone opens. They have sampled all the core. Now, core looks like just marble to me. It doesn't mean anything. Like to me, that's why I don't have a geological, technical, skilled eye to interpret core. But they put in thousands and thousands of meters, of kilometers of core, and all of a sudden they start finding out this core was the best success for a major discovery. This wasn't. Here's a big deposit. Here's not. And AI is all of a sudden scanning and machine learning, and it can identify core from anywhere in the world to say where it came from, and this is a pattern for a big deposit, or this is wasted money. But it's just like your iPhone. Another thing is that when you're a great athlete, like Kobe Bryant, may rest
Yeah.
in peace. Kobe Bryant not only was he an athlete that moved like a cat down the court, he had tremendous peripheral vision as an athlete, and he could see. So my hands, I could see my hands here, but a Kobe Bryant could see them way back here. So he could see you cutting on the left side or the right side, and he knew how to pass the ball to you. He knew how to cut. He had a DNA of a different agility and a different speed. So this AI machine learning gives someone like me this capacity to all of a sudden see like Kobe Bryant. I can see back. I can see things that the geologists can see things they never saw before. And that's the value proposition. And therefore, you make less errors. You basically are able to compare tectonic shifts around the world and compare that a deposit in Norway shows up in Boise Bay in Newfoundland that shows up in South Carolina because a gazillion years ago, the tectonic plate shifts had moved around. In applying that data mining really helps make better decisions.
Okay, so all that data adds up, and sort of a DNA is built or recognized, and I guess that's what they go ahead and look for. I'm about to wrap up, but do you have anything else that you want the listeners to know?
Yeah, I think when you look at gold and silver in the world, is make sure you have physical silver and gold. I think that's just prudent. And if you can have 24 karat gold jewelry to wear, that's even better. But owning gold stocks, quality, the royalty, I think that that's very, very smart. But sort of don't go over 20% of your portfolio. Don't bet on the world going to fall apart, and bet on living, bet on enjoying life. And every day that you and I can talk and wake up means we got to say, blessed that we are alive, blessed that we are able to. You're in the best city center in the world. Singapore is the best place of a city, of a country. So you're blessed to be there. I'm blessed to be in the greatest nation in the world. We have to have gratitude and then turn around and be like, buy car insurance, diversify your portfolio, but don't bet on the world coming to an end, and don't bet on gloom and doom. Bet on a boom.
Okay, I like that. Hey, one more question though. Last time we spoke, we talked about peak gold. How about peak silver? Is there such a thing?
Yeah, it's silver is quite often a byproduct of other metals. So I think that there's been no major supply that's come on, and I think that which outside of industrial demand, the consumer hasn't lit up the lights yet. But I think that India could be, and I think that China, and I think this whole scare, this virus scare, is just to remind people that these viruses cannot attach themselves to silver and to gold, and particular silver. And silver is a great way. I love giving silver gifts out. I love giving to people. And then we just had an employee meeting, and those have been around 5 years, 10 years. Everyone got coins. They get the longer they work at US Global, they get beautiful silver coins. I think that will be the big change for going forward.
Okay. Frank Holmes, before we wrap up, can you share with us what U.S. Global Investors does and the opportunities the company offers?
Well, U.S. Global Investors is a basic investment advisor holding company that makes strategic investments. We launched the first crypto mining company called Hive Blockchain, mining using green energy, Ethereum in Sweden predominantly. We were the first that ushered in $1 billion into Canadian capital markets. We couldn't launch an ETF, so we were the ground floor creation of Hive Blockchain. Along with the ETFs, there's no other airlines ETFs, so we launched jets. We launched the first quant-based gold equity ETF. So we do those unique products, and we make unique investments. And so Gold Spot, I put a couple $1 million into it, went on as a chairman of building out this company. And go to usfunds.com and subscribe to the Investor Alert. We publish every Friday. We provide a SWOT analysis. We talk about the world of gold. We talk about Asia. We talk about Eastern Europe. We talk about capital markets. Always 4 sentences for strengths, for weaknesses for the past week. And next week, we try to forecast 4 opportunities and 4 threats for different asset classes. So please, if your viewers, sign up to and go to usfunds.com. And I hope you enjoy it. And if you have any ideas how we can improve what we write about, send the information in to us.
Okay, we appreciate that. We'll be excuse me, we'll be sure to send them your way. Frank Holmes, we appreciate the time that you've given us, and I do hope we can do this again sometime. And I gotta let you get out there and start looking for that gold again.
All right, well, go off and have a lovely dinner. Good night.
That was Frank Holmes, CEO of USA Global Investors and chairman of Hive Blockchain Technologies. For more of his writings on precious metals, please visit his website, www.usfunds.com. And if you like this video, please hit the like button and subscribe to the SBTV channel, and check out our SBTV podcasts on iTunes and Spotify.